Today's video is going to be all about how you can identify fractal structure using one single method. I'm going to be doing a walkthrough here on Eurodollar on the 4-hour time frame, showcasing how you can use fractal structure to your advantage in order to take trades on a daily basis. Now, I hope you guys enjoy this video. Make sure to leave a like and subscribe. And without further ado, let's dive straight in. We're here on the 4-hour time frame on Euro USD, and what I'm going to show you today is again how to identify fractal structure. So we're going to be doing a walkthrough here on the chart, but I'm also going to be showing you some trade examples. But before we dive into that more specifically, I want you to write one thing down. So when it comes to market structure, there are two forms of market structure, okay? We have swing structure and we have fractal structure. These are the two most important forms of structure, and when you understand these two, you can read any chart and you can always understand how to take a trade. So when we're here on Eurodollar on the 4-hour time frame, what we're going to first look at is the overall swing structure. So we use swing structure to understand where the market is trending in general, right? So what we have over here are two breaks of structure, and it's very clear that the market is trending in towards the downside. However, what happens is that the market breaks in towards the upside and we see a bullish break of market structure. So at this point in time, the market is trending in a bullish range in between this low over here and this high over here. Now, what you need to understand is that at some point in time, the market is going to be ready to make a retracement in towards the downside, because we're never just going to be impulsing in towards the highs forever. Now, what we use to understand when the market is ready to pull back is something called fractal structure. Now again, swing structure is going to be the overall trend, as we can see over here, in towards the downside, which is now again bullish. And the fractal structure is used to understand where the market is trending on, let's say, a daily basis itself. And for this, we look at the individual candlesticks themselves. So what we have here on the 4-hour time frame, as you can very clearly see, is that as soon as we get that overall bullish break of structure, we get the push up, we get the retracement, we get the push up, we get the retracement, we get the push up, retracement, push up, retracement, push up, and then we get the push down, breaking fractal structure over here. At that point in time, the buy before the sell that we have over here becomes your area of supply. And that is, for example, the key indicator that I like to use when it comes to market structure to understand that we're ready to see a pullback, for example, back down in towards the 0.5 Fibonacci retracement level, which is also known as your discount. So as we can then see, the market starts to push in towards downside. It respects that area of supply and it therefore respects that fractal structure, and that is how you can understand that the market is ready to retrace. Now, when it comes to understanding and reading fractal structure itself, let's just dive into the individual candlesticks themselves. All right, so we're now just zoomed in on Eurodollar, and when it comes to understanding what the fractal structure is, all you're simply doing is looking at the individual candlesticks and their overall trend. So if you were to look at this overall as a trend, what you can see over here is that we get the push up in towards this high, we get a retracement in towards this low, and then again we see a push up in towards this high. Now this is the point where the market stops, right? Then what happens after that is that we see a retracement into this area of demand. At that point in time, we are still bullish and we would still be expecting further upside. However, if you zoom out and you look where the market is trading, obviously understand that we're after a break of structure, and after a break of structure you expect a pullback. So it is very likely that at some point in time the market is going to start pushing down, especially if you look left and you see, for example, a key level of support and resistance, an area of liquidity, or a higher time frame area of supply, then it is just simply likely that the market is going to start pushing down. Now we use fractal structure to understand that that market is ready to push down. So again, if you look over here at the individual candlesticks, what you then see happening is that the market pushes in towards the downside and breaks this low. Now officially this is then called a fractal structure break. Then what becomes your overall fractal high? That is this candlestick over here. So not this candlestick over here, but the most recent high that broke a low. So what we see over here is that this is your most recent high. Why? Because you see the push down, we see the retracement, and then we see another push down. We failed to break this low, and therefore I consider this an overall pullback, which then breaks this low over here. What you then see happening is that we see another push in towards the downside. The market then once again retraces. So this is now your fractal range over here. We start seeing a retracement in towards, again, the premium levels. The market pushes up in towards where? This daily area, or excuse me, this 4-hour area of supply. We have a liquidity high positioned right below it. And this is then, for example, how you could scale in on a potential pullback trade. Why? Because here we see the initial push down, right, which breaks this fractal structure. We see the retracement up, and now we just expect this overall trend to continue back down with the fractal structure in towards those discount levels. As you can see over here, if I just draw on the tool, you can very obviously see that, for example, here we have equal lows open and we have a fresh area of demand open as well. Of course, eventually we expect the overall bullish trend after this break of structure to continue, but first we need a sizable retracement to then see that next long happen in towards the upside. So now again, if I look at the individual candlesticks themselves, we can very clearly see that we get that retracement in towards that supply zone, and then from there we get that push down again. Now again, what we're going to simply do is look, okay, what is now the new fractal structure? So the new fractal structure is now this high over here, because that is the most recent high which broke this low. At that point in time, then this buy up before the sell down becomes your area of supply, also known as your order flow, and you could simply scale in on that supply zone, again with your stop loss above the highs. What you then see happening is that the market taps into that supply zone and then continues pushing down lower again. At this point in time, what we see happening over here is that once again, we get a retracement. The low doesn't get broken, and therefore I consider this a fractal pullback. At this point in time, this is still my fractal high, and this is now my fractal low. We expect the market to retrace and then continue down lower once again. So what we see here is that the market continues down lower and we get a fractal low break. What is then your fractal high? Your fractal high is then the most recent high which broke the low, which will be this high over here. Again, this is the push down in towards this low, push up in towards this high, and then again, a push down in towards the lows. What we then see happening is that the market starts to retrace again, exactly in towards that area of supply, because this is your buy before the sell. Again, your fractal structure is from this low and this black line high over here. We see a retracement into that supply zone, and then from there, what happens? The market starts to push down again. And then again, we break the low, and as you can see, we then tap in towards that higher time frame area of demand. Now at this point in time, the fractal structure is still bearish, because after the break of this fractal low, what is then your fractal low? This low over here. What is then going to be your fractal high? This high over here of this bearish candle, not the high of the green candle. But why? Well, because we take the most recent high which broke the low. And as you can see over here, from that bearish candle over there, that is the point where the lows get broken. So that's the point where you start seeing the impulse down. Then again, we get a pullback into where? In towards the overall supply zone over here. And then what happens after? We get a retracement all the way up into premium. And then from there, we see a sizable retracement back in towards the downside. Now, once again, what is then going to be your fractal structure? Your new fractal high is going to be the high of this bullish candle over here, not the high over here, but really genuinely the high of that bullish candle. Why? Because that again is the most recent high which broke this low. Again, you can see that's the point where a new high is formed, because you kind of see this as a pullback and a push down, and from where you start breaking the lows again. Then again, what happens over here is that this then is your fractal structure. Here we had the fractal break in towards the downside. At this point in time, we're trading in demand, so taking on new sells is obviously going to be very risky. At this point in time as well, this is then your area of supply. We see the market retrace up, never retraces into that supply zone, but it retraces in towards the overall supply zone, right over here. And then if you were to draw a Fibonacci retracement tool on that fractal structure, you can then again see a perfect 0.5 Fib retracement. Now at this point, what is then your fractal high? Your high of this bearish candle is now the fractal high. And again, we see a fractal low break over here. Then this becomes your area of supply, which is now in control. What happens is that the market continues to push down and then starts to retrace. And then again, it taps into that supply zone and then it heads down lower once again. At that point in time, this was your fractal low over here of this bullish candle. And again, we see a fractal low break. Then once again, we see a retracement into where? Into this area of supply. And then again, you could have shorted, because you can pretty much just keep shorting on those supply zones which are then formed with your stops above the overall fractal high, because you expect that to maintain or to continuously be respected. And then again, we see a push in towards the downside and into our TP. So this is how you can trade and read fractal structure. I hope you enjoyed this little breakdown / walkthrough. If you have any questions, make sure to let me know in the comment section down below. Make sure to join the free Discord, and I hope to see you guys there. Have a great day.